Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in China, and specifically to talk about the local government debt. Now, you might be thinking, local government debt? Who cares about that? Is that of any relevance to anybody? But the issue here in China is that back in the 1990s, the government decided that it was going to ban all of the local governments from taking on any debt. They didn't want the local authorities getting themselves indebted. Now, in order to get around that, the local governments created what are called local government financing vehicles, or LGFVs. And those local government financing vehicles were allowed to take on debt. So it's sort of bizarre that although it was banned, all you need to do is set up a company and take on the debt and everything's fine. And the local governments themselves rely upon money that they raise from land auctions. So over the past 30 years, it's been a boom time. As the property development boom started to take off, local authorities held auctions every month and they sold huge parcels of land and took in all of the cash. However, those land sales weren't sufficient to pay for everything, and so the local government financing vehicles started taking on debt. This was around the mid-1990s. And over the past 30 years, that amount of debt has mushroomed. And this is now seen as a major problem. And if those loans were ever to be called in, this could mean that China would be in a world of pain. And in order to try to address this problem, China recently announced that it was going to issue 10 trillion yuan, which is around 1.4 trillion US dollars, of special purpose bonds that would be used to refinance the local government debt. Because it's been reported that the cost of the existing debt is so high that the local governments have now been cutting back on salaries of all of their employees and struggling to be able to pay some of their bills. And the reason that they issued 10 trillion yuan of bonds is that the finance minister in China said that that equates to the total amount of local government financing vehicle debt. However, this chart produced by the International Monetary Fund contradicts what China is saying, and it shows that in 2023, local governments had 60 trillion yuan worth of debt, and that's expected to rise to 65 trillion in 2024. So the IMF, which is one of the largest global research agencies, is saying that the actual amount of local government debt in China is 6 times the amount that the Chinese authorities have said that it is. And this chart, which has also been put together by the IMF, shows the total amount of government borrowing in China from 2019 to the forecast levels for 2029. And the different coloured sections that we've got here, the pink section at the bottom shows central government debt. The green section above that shows debt that has actually been taken on by the local governments, even though they're not officially allowed to be taking on debt. The yellow section above that shows the local government financing vehicle debt, and the orange section at the top shows debt related to construction projects. The scale on the left-hand side is shown in trillions of Chinese yuan, and the black line shows China's gross domestic product. And what this chart shows is that between 2019 and 2024, the amount of national debt in China has doubled from around 80 trillion yuan to the current level of around 165 trillion. And that figure is forecast to increase in every single one of the next 5 years and to rise above 250 trillion Chinese yuan. So over this 10-year period, the total amount of government debt in China is forecast to more than triple. Now, before we go on any further today, I want to talk to you about today's sponsor, NordVPN, who are offering Joe Blogs viewers an exclusive deal that you can access by clicking in the link below. Now, if you follow the channel, you'll know that I personally have been a victim of cybercrime. This channel was taken over by crypto criminals, and the way that that happened was I was sent a link which I clicked into, and that link contained malware, and that meant that the hackers had access to my computer and basically changed all of my passwords and personal details. And if I'd have been using NordVPN at that point, it would never have happened, because NordVPN contains a unique feature called Threat Protection Pro, which would have prevented me from being hit by that malware attack. So NordVPN is fantastic for protecting you every single time you go online and making sure all of your data remains secure. But it also opens up a world of opportunity for you because it enables you to access data and information and TV shows and movies and sports matches in regions that you may be geo-blocked from. You can change your location and access all of that entertainment. So as I mentioned, NordVPN is offering a special deal for Joe Blogs viewers, which you can access by clicking in the link below. And the great news is that it offers a 30-day money-back guarantee. So if you're not happy, you can get your money back within the first 30 days. And in terms of looking at the amount of debt relative to China's GDP, you can see from the black line on this chart that in 2019, the total amount of debt was less than China's GDP, so the ratio was less than 100%. However, in 2020, as a result of the large increase in debt, the ratio hit 100%, where it stayed in 2021. However, since 2022, the ratio has been above 100%. So that means that China now has more debt than GDP that it's producing each year. In 2023, the ratio increased to 117%. And as you can see from the right-hand side of this chart, the increase in debt is forecast to outstrip the increase in GDP. And by 2029, the debt to GDP ratio is forecast to be 150%. Now, whenever I make a video like this, I usually get lots of comments below from people saying, never mind about China, what about the USA? They've got $36 trillion worth of debt. They're the most indebted nation in the world. They should be worrying about themselves. You shouldn't be talking about China. Let's talk about what's happening in the USA. And whilst it is true that the US does have $36 trillion worth of debt, it also has significantly more GDP than China. This pie chart shows the percentage breakdown of global GDP in 2024, and as you can see, the USA is by far the largest economy, and the forecast GDP figure for 2024 of $28.8 trillion equates to 26.4% of total GDP. China is the second largest economy in the world, and its forecast GDP of $18.5 trillion equates to 17% of total GDP. So these are the two largest economies in the world. However, China's GDP is around 50% lower than the US. And if we look at this chart, which shows the debt to GDP ratio for the USA between 2019 and the forecast level out to 2029, you can see that over the past 5 years, the USA has had a higher debt to GDP ratio. And in 2023, the debt to GDP ratio is 123%, which is higher than the 117% that we just looked at for China. However, if we look at the forecast for the next 5 years, the ratio is expected to grow at a slower rate than it is for China. And by 2029, the ratio is expected to be 134%, compared to the 150% that we just looked at for China. So what these charts are showing us is that relative to the USA, China is becoming more indebted. It's taking on higher and higher levels of debt compared to the growth in its GDP. So the leverage is increasing in China. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening in China and what's going on with China's debt levels is really quite fascinating and also concerning. Up until this point in time, we've been looking at China as being a fast-growing economy. It's aiming to achieve 5% GDP growth over the next few years, and that's around double what we're expecting for the USA. And one of the reasons why China is growing so rapidly is that it's still a developing economy. It's still looking to capitalise on all its people to convert as much of the production into GDP and continue growing. And what you don't really expect with a developing economy like China is that it's taking on large amounts of debt. The USA, we've been talking about for a long period of time, has been taking on debt. It's got over $36 trillion. But the USA also has a large amount of GDP. So although it's growing at a slower rate than China, the total GDP is much bigger, around 50% bigger. And so it can cope with a larger amount of debt. What we're seeing in China is that over the course of the last 5 to 10 years, the amount of debt that it's been taking on has been growing rapidly. A lot of the local governments have been taking on debt through their local government financing vehicles. This is what's been referred to as shadow banking, off-balance sheet debt. the local government financing vehicles are using things that are hard to track. And that's one of the reasons why the finance minister in China has come out and said that the total amount of debt is only 10 trillion yuan. However, the IMF believes that it's 6 times that. It's over 60 trillion yuan. And if that figure is right, then that's going to prove a major problem, not just for those local authorities, but for the Chinese government, because this debt comes at a cost. You have to pay interest and other fees attaching to that debt. And what we've seen over the past few years is that the local governments have started running out of cash. And that's predominantly due to the fact that the property market has slowed down so much. In the past, they were able to keep selling parcels of land at the monthly auctions to bring in huge amounts of cash. And the reason that they could sell them was because all the Chinese property developers were hungry for land. They wanted to buy more and more so that they could build thousands, tens of thousands of apartments, pre-sell them to all of the Chinese consumers and make lots of profit. However, as the property market has nosedived over the past few years, what we've seen is a huge slowdown in the amount of land that's being sold by the local authorities, so they no longer have that cash flow. They don't have that money to be able to pay off all the debt. And what we've got now is a vicious debt circle, because they've got 60 trillion yuan worth of debt that needs to be serviced. They don't have all of the money that's coming in from the land sales, and so they're now having to cut back on other expenditure. So it's been reported that they've been cutting salaries and not making payments when they're due. And so we've got a situation here where the local governments have got a liquidity crisis. They potentially could go bankrupt. So the authorities have stepped in and announced these special purpose bonds to refinance some of this debt to make it a bit cheaper. Now, that doesn't actually solve the problem. All it's doing is reducing the debt cost. It's not generating more income, it's not generating more GDP, and it's not generating more cash flow for those local authorities. So this is a sticking plaster situation. China is papering over the cracks to try to solve the short-term issues, but it's not solving the fundamental problem. And that's one of the reasons why these announcements haven't resulted in an upturn in the Chinese stock markets, because commentators are looking at it and saying, this doesn't fix the problem. This is just trying to reduce the debt costs. It's not generating more income. So the overall summary of today's video is that the Chinese authorities recently announced another round of incentives. They're trying to boost the economy. However, this latest round is really looking to refinance some of the local authority debt. However, interestingly, the Chinese authorities have only admitted to 10 trillion yuan of debt when the IMF is saying that it's more like 60 trillion. So the problem is 6 times greater than the authorities have admitted. And if China doesn't do something soon to generate more GDP and stimulate the economy, we could see these local authorities starting to drown in debt costs, and this is further increasing the risks for the Chinese economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.